broad message will be we didn't see a change in the last quarter. But if I have to kind of drill down a little bit, if you look at our ER&D business, where there is more engineering outsourcing, new product development kind of work, I mean, last 2 quarters we've been growing, and it does look like we will continue to grow. So I think on that front, we feel a lot more positive about the environment and the spending, and some of that is coming from the tech vertical. But if you look at the broader IT spend, I think discretionary spending has really not picked up. It remains at similar levels like what we saw in the previous quarter. But however, having said that, there are always some bright spots where the spend is resilient, like cybersecurity is an area, SAP migration is an area, data. Now, a lot of customers are embarking on GenAI programs, but it also means they need to significantly transform and evolve their data landscapes. So that is again a big opportunity area, and we see some opportunities in that space. So while the overall discretionary spend environment would be similar, there are some pockets where we believe there is strength, and we are focusing on that. And then the biggest opportunity continues to be hyper automation, delivering hyper automation, efficiency, productivity benefits to clients. And that's a big theme which is continuing to play out in vendor consolidation and cost takeout opportunities. I don't want to comment on others, but if you look at our bookings and revenue, there is a very strong correlation. Like last quarter, we had a historically high booking, close to $4 billion. We see it translate to revenue this quarter. So I think we've done our internal analysis, and the way we classify booking, it's all net new booking, and that has a very high correlation to the revenue. Disruptive service provider in the BFSI space, and of course this quarter was impacted by furloughs. I do believe our prospects in BFSI continues to be strong. We've grown 12.9% year on year. That's the highest probably anybody's BFSI business is growing. I think it's again led by efficiency, hyper automation, and some specific programs around data and cybersecurity, and those are the opportunities in financial services that we are looking at. That we are seeing a lot of programs. Most of them are pilots which are being implemented. We are seeing some very good success out of the pilots that we have implemented. In fact, this quarter we had, as I mentioned, 30 plus Gen AI specific orders that we won, which are all under execution. While the real scale up will happen over a period of time, but more than Gen AI, the need to kind of adopt Gen AI in a very effective manner is driving significant spend in the data landscape, both data modernization, cloud migration. Some customers are trying a private stack for their own LLMs. So it's the surround spend which enables Gen AI. That's where the biggest opportunity is. And as a kind of holistic service provider with hyperscaler partnerships, hybrid cloud, private cloud capabilities, and strong presence in data, all of that. We think in the next 2-3 quarters, we will see some sizable programs, which is kind of driven by the aspiration of what GenAI can do for an enterprise, but it's really getting all the foundational blocks in place. So I think it'll take a couple of more quarters in our assessment. Yeah, the challenges are the discretionary spend is still muted. So I think that's definitely the concern, and some of the macro aspects and geopolitical aspects are continuing to put strain on our clients' P&L. So they are going to continue to look at every spend with a stronger ROI kind of an outlook. I mean, that's primarily the challenge. Opportunities, of course, there are a lot of bright spots, as I said, cybersecurity, SAP, modernization, data, and getting your landscape ready to get the full benefit of Gen AI. I think there's going to be a lot of foundational investments that are being made. So I think those are the opportunities at this point. Outlook for mega deals, I mean, at this point, we have a strong pipeline, and it's got a mix of small, mid-sized, and large deals. Uh, so we expect some of the deals to get converted in the Q4 and even next year. So pipeline is strong with different flavor of deals across the spectrum. At this point, we don't, I mean, most of the efficiency-led opportunities, we don't see any delays. However, if there is a transformation project which the customer had envisaged to kickstart it or to kind of get going, there has been some delays. So cost takeout deals, I think it's been pretty brisk. Outlook for 24 at this point, we are guiding for financial year 24, which ends in March, where we expect to do a revenue growth of 5 to 5.5%. We're not giving any color on the next year at this point. I would wait for it. We will do that in April. Uh, in terms of the EBIT margins on software business.
Jan furloughs was the other.
Yeah, so January is generally the furloughs are higher in the December quarter, but we do have some furloughs in January as well, especially in the Asia Pac market. There are clients who come back from the summer vacations a little late, so that's again a possibility that January also there are some furloughs.
Like we said, the guidance continues to be 18 to 19% for us for this fiscal year. And 19.8% is obviously a great number to have, but that's one quarter out of four. And our number for the full year would be in that range, 18 to 19. It's a seasonally good quarter. Even last year was 19.6 in the December quarter. So unfortunately, that's not true for the rest of the three quarters.